The lead up to Christmas may be tougher than expected for retailers, with consumer confidence falling unexpectedly. After 2 months of sharp rises, the latest measure of confidence has slipped on concerns about the global economic outlook. But the Australian dollar has avoided the malaise. Simon Palin reports.
Consumers have plenty of reasons to feel optimistic on paper. Steady interest rates, good recent jobs data, improvements on equity markets and a resolution to the political uncertainty. But in practice, it's a different story this month. The Westpac Melbourne Institute Consumer Sentiment Index for September has fallen 5%.
I think there is a degree of consumer caution all around the world now, and it's obviously related to the aftermath of the global financial crisis, the fresh memories that they have of potentially losing their jobs only a couple of years ago, and the fact that they do have high levels of debt.
In the survey of 1,200 Australians, the greatest weakness came in response to questions about the economic outlook. The index measuring expected economic conditions over the next year fell by more than 7%. It's seen as adding weight to the argument that the Reserve Bank shouldn't raise interest rates anytime soon.
I think that things are still quite tenuous. And we saw in that long period of consecutive rate hikes coming from a very low base that really did have quite an impact on the consumer. We saw a very cautious consumer and we saw the retail sector really struggling. I think an early return to rate hikes would have that sort of an effect again. I believe that we can wait till at least early next year.
One factor that's usually positive for consumer sentiment is a rising Australian dollar. And overnight, the currency soared to levels not seen for 2 years. The dollar touched a peak of 94.57 US cents, climbing almost a full cent in the minutes after midnight.
Now that's part of more generalised weakness of the US dollar. So the Australian dollar has been higher, but most other currencies have been higher against the US dollar as well.
The US dollar weakness comes after rumours the Federal Reserve is about to begin buying $1 trillion worth of Treasury bonds later this year. The practice, known as quantitative easing, aims to spur growth in the US economy. But the flood of US dollars into circulation weakens the currency, in turn prompting demand for alternative investments like gold.
People are concerned about paper currencies. They want to see hard assets. We're seeing that across Asia, so we see Asian buying. And now we're actually seeing investment funds going, look, I don't really know what's going to happen with the global economy, but I'd better just buy a little bit of gold and put it in my portfolio.
That sentiment saw US dollar gold prices hit a record high overnight, rallying to just under $1,275 an ounce. Good news for gold producers like Kingsgate Consolidated.
As we see gold going up and as we see M&A activity, yes, it inspires investment bankers and hedge funds to get in behind that story. Kingsgate will either grow rapidly or it's got a target on its back. It's really only go one of two ways.
And it's not only private investors piling into gold, the price was also boosted by predictions that central banks will be net buyers of bullion this year for the first time in 2 decades.